One of the biggest reasons why most traders fail is because they don't deeply understand market structure and they keep getting stopped out by the markets. Now, if you watch this video to the end, you'd have one of the most important keys you need to become a consistently profitable trader in the market. I've built my entire system around this and it's powerful, but it's also the most easiest thing to get wrong because here's the truth. The market doesn't just go up and down. The market goes up, down, choppy, and it loves to trap traders a lot right before the real move happens. So in this video, I'm going to completely simplify market structure so clearly that even a beginner could understand it, and how to spot the real trend, reversals, avoid catching falling knives, and stop getting chopped out by fake moves in the market. Okay, cool. So simplified market structure, and this is what we're going to talk about. And first, I'm going to walk you through the theory part before we now get on the charts. But market structure is very, very simple. I mean, market structure is simply the story of price movement that helps you understand where the market is coming from and going to. So each candle in the market has a story to tell. Open, movement, bullish, movement, bearish, consolidation, and close. So each candle in the market is telling a story. And now market structure is telling you the story behind every candle that you're looking at in the market. So we have three ways that the price moves. Price moves bullish, higher highs and higher lows, uptrend. And then price moves bearish, lower lows, lower highs, and then consolidation, no clear direction of the market. But literally, market structure is so simple that the only thing you really need to understand is the trend in the market. You need to understand structure mapping, highs and lows, break of structure, which is continuation. If the chart is bullish, then you're going to get break of structure. And if the chart is bearish, you're also going to get break of structure. And then market structure shifts, which we use to catch reversals. And you could also call it change in states of delivery. You can call it change in character, change of character, whatever they call it, it doesn't matter. The main reason why I'm creating this video is because I'm trying to simplify all the jargons that they've been pushing out there. And the only thing you really need to know about is break of structure and market structure shift. So for the sake of this video, so we don't waste time, we're going to term it market structure shifts, reversals, market structure shifts, change of character, the same thing. And we're also going to be looking at break of structure versus market structure shifts, internal structure, which is the internal structure during, if it's bullish, you see the internal structure. If it's bearish, you're going to see the internal structure as well, and also in consolidation. And we're also going to be looking at liquidity sweep and versus break of structure. And I would also be showing you how to mark your premium and discount zone on the chart using the Fibonacci and time frame alignments, 4 hours, 15 minutes, daily, 5 minutes. And we're also going to be looking at live trade example. So this is going to be the most simplified market structure video that you're going to watch, because in theory we understand market structure tells the story of all the candlesticks that is currently presented on the chart, and then price can only move in three ways: higher highs, higher lows, lower lows, lower highs, and no clear direction. There's three ways: bullish, bearish, and consolidation. And we are going to be looking at all this step-by-step guide to help you simplify market structure. Okay, cool. So in theory, this is just the theory part. In theory, we're going to be looking at all of this. I mean, we're going to be looking at the movement of price. This is clearly an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. And within all these higher highs and higher lows, you have this. So if price is bullish and price closes above the last higher high, it's a break of structure. For example, you can see this first time, price closed above this last higher high. That's a break of structure. And this is it again. That's a break of structure. And this is it again. This is another break of structure. And this is the higher low, higher low, higher low. Simple, right? Yes. So this is a bullish order flow, but this is theory. In reality, price doesn't just move higher highs and higher lows like that. Price is very, very choppy. So when you come into the market, you're going to see higher highs, higher lows, higher highs, a clear break of structure, and then you're going to see internal structure. Now, internal structure is something that you just want to avoid. You don't even want to pay attention to because it doesn't matter. I'm trying to simplify this as much as I can, and I think the best thing you can do is just stay with me and understand that internal structure doesn't even tell you anything about price. It's just choppy, and this is an impulsive move while this is a corrective move. This is what you need to pay attention to, the higher low. And then this is also another leg of internal structure that you want to avoid completely. And then the only thing you're looking out for is a break of structure. Now, when I'm using my simplified strategy, I only use the 4-hour daily time frame, and then I link that with the 5 minutes and the 15 minutes time frame. I never go below the 5 minutes. I don't even look at the 3 minutes, except for if I'm trading Dow Jones or YM. And mostly I'm just focused on the 5 minutes because it's very clear. You can easily understand. The 1 minute is too choppy. So now I just need you to understand this on the 4-hour time frame and on the 5 minutes time frame. The least time frame you can go to is the 5 minute time frame. So you just want to be on the 5 minutes, 15 minutes, 1 hour, 4 hour, and daily time frame only. Now back to internal structure. So internal structure can be very, very confusing, but you don't want to pay attention to it at all. It's just noise. The only thing, the only thing you're focused on right now is just higher low, higher high, higher low. The last low before the break of structure is your higher low. So all of this BS, but this is what you want to focus on, higher low. And then once price breaks structure, closes above the last higher high, that's a break of structure. And then this is internal structure again, and then the last higher low, and then another break of structure. And a break of structure is termed when a candle closes above the higher high. And in a bearish trend, you're going to look at it the other way. But in a bullish trend, the candle needs to close not weak. So when a candle weaks the last higher high and doesn't close above, that's a liquidity sweep. But we're going to look at that before the end of the video. So let me move to the next slide. You're going to see a bearish downtrend market structure. This is a bearish order flow. In theory, this is what you see in the books, like you're going to see in the very, very common books, but this is not how price moves. You see lower high, lower low, break of structure, lower high, lower low, break of structure, and the break of structure is termed by candle close. So lower low, lower high, break of structure, and this is your bearish order flow. But that's theory. This is what you need to focus on, reality. Now, price action is very, very choppy. So when you have your lower low, you have your lower high, you have your lower low, the break of structure. Now, this lower low is termed by the last low before the break of structure. And this lower high is termed by the last low high before the break of structure. Now, all this price action that you see right here, multiple candles, choppiness, consolidation, is just internal structure. And you don't even want to pay attention to internal structure. You only want to focus on the last high before the break of structure to be your lower high, and then the last low, which is the lower low. So once price closes below the last lower low before the break of structure, then you can call that a lower low, then you can call this a lower high, and then you can call this a break of structure, and you can term this the lower low. Now, all of this you see right here again is internal structure. You don't want to pay attention to it. The only thing you really need to focus on is the last high before the break of structure and this last low right here. So this and this is your market structure. Everything in between is noise, and that's internal structure. And we don't pay attention to internal structure. Now, this is a consolidation market. Most times when I see this, I just mark it like this. This is a consolidating market. In theory, they're going to say this is a high, this is a low, high, low, high, low, high, low. No break of structure, no market structure shifts. Price is just completely choppy. You want to stay away from this. In reality, this is what it's going to look like. It's just going to be chopping around, taking out structures, sweeping liquidity, and all of this right here is simply just liquidity. So if I'm going to trade this, since this is liquidity, we can call that sell side liquidity, and then we can call this buy side liquidity as well. So if this is liquidity, all I'm looking for is a read of this liquidity right here, something like this, and then a market structure shift, mini market structure shift, and then we can look for a continuation. But just before we look at this, we're just basically talking about market structure today. But if you look at this is consolidation, and all of this right here is internal structure. Don't pay attention to it. If you zoom out, for example, if you see this on the 5 minutes time frame, if you zoom out a little bit to like the 15 minutes time frame, you're going to see clearly exactly what price is trying to do. It's consolidation. It's just weakening every highs and every lows. You want to stay away from this type of market. So we've talked about the bearish trend, lower lows and lower highs, lower lows and lower highs, internal structure. We've talked about the bullish trend as well, higher highs and higher lows, higher highs and higher lows, break of structure, and internal structure. So I said, don't pay attention to internal structure. All you need to do is just look for that last high and that last low, and just focus on if the candle is breaking structure, or if the market is actually shifting structure. So now coming to market structure shift versus break of structure. I said market structure shifts can also be termed as change of character. Some even use it as change in state of delivery. You don't even want to bother about all those noise. In simple terms, you only focus on break of structure and market structure shifts. Now, if you look at this right now, in theory, this is what the market looks like. Higher highs, higher lows, higher highs, break of structure, higher lows, higher highs, break of structure, and then market structure shifts. So a market structure shift is termed when there's a bullish trend and then price shifts from a bullish trend to a bearish trend. So once you come into the market, for example, when I come into the market, the first place I go to is the 4-hour time frame, because I want to see clearly what the structure is telling me. Because I said market structure is telling you a story of the market, the story of the prices, the story of the candlestick. Every single candlestick in the market is telling you the story of price, and the market structure is showing you the story of the candles. So what you want to focus on is when you come into the market on the 4-hour time frame, first place I check is the 4-hour time frame. I'm looking at structure. Is there a break of structure? Is there a market structure shift? Is there a break of structure? Is there a market structure shift? Where's the most recent break of structure? Where's the most market structure shift? It's that simple. You don't even need to complicate it. Are we in a series of higher highs, higher lows, or are we in a series of lower highs, lower lows? So this is theory, but let's go to the reality. Now, this is an higher high, and this is an higher low. Okay, cool. So if you look at this now, you're going to see all of this in between is internal structure. You see how choppy it is. This is exactly how the market moves. But disregard the noise. All you're looking for is the last high and the last low. So the last low before the break of structure is going to be your higher low. And then that's all you need to focus on in the bullish market trend. All of this is internal structure. Ignore. All you're focused on is this higher high and this higher low. Then if this is a break of structure, the candle needs to close above the last higher high. This right here is noise. This is the last higher low, and this is the last higher high. Anything in between this place is noise until price closes above this. So this is a break of structure. This is internal structure that you don't even need to pay attention to. And then the next place you want to pay attention to is the market structure shift. Once the candle closes below the last higher low, that's a shift to a bearish trend. That's a market structure shift for me. Don't confuse it. This is a bullish trend. This is a bearish trend. But for price to go from a bullish trend to a bearish trend, there needs to be a market structure shift. And for there to be a market structure shift, there needs to be a candle close below the last higher low. Now, this is your market structure shift, and this is your new lower high. So price has switched from a bullish trend to a bearish trend. All of this right here is noise, internal structure. Don't pay attention to it. Now, this is your new lower low. This is your lower high. This is your new lower low. And this is your new lower high. So in simple terms, for you to tell the story of candle, you only need a few basic things. You need to understand if it's a bullish trend. If it's a bullish trend, it's going to be a series of higher highs and higher lows. The higher low is going to be the last low before the break of structure. Now, anything in between is noise. That's internal structure. So you need your candlestick to close above the last higher high in a bullish market trend for you to understand that the price action right now is bullish. And then when there's a market structure shift, for you to tell me market structure shift, the only thing that you need to do is see a candle close below the last higher low. And that's a shift from a bullish market trend to a bearish market trend. This is very, very simple. You can't even confuse it. This is the higher low. This is this is a market structure shift. And this is the lower low. All of this is internal structure. Don't pay attention to it. This is the last lower high. Now, price switched bearish from here. So you see the way I didn't term this market structure shift, I termed it break of structure. Of course, it's break of structure because if the price action is bearish, a candle close below the last lower low is going to be a continuous break of structure until there is a new shift. Now, if a new candle closes above this last lower high, this is a market structure shift. Price have switched bullish again. Now, when price comes down a little bit and continues like this, the trend has changed back to a bullish trend, and this is now a break of structure. Simple. You don't even need to complicate it. Now, let me show you the next slide. So now let's just go straight into the chart because you can easily tell, you can easily understand what a market structure shift is now and what a break of structure is. So let's go right into the price action. Okay, so now, like I said, this is GU on the 4-hour time frame, and most times when I come into the chart, I'm basically just focused on the 5 minutes, 15 minutes, 1 hour, 4-hour time frame, and the daily. I don't really look at the 1 hour because it's in between. I'm only really focused on the 5 minutes, 15 minutes, the 4-hour, and the daily, because that tells me exactly what price is doing at this particular time. And I'm currently trading the New York time zone. Most of you will be trading the London, but if you're also trading the New York, good for you. So if you're looking at this now, we're just trying to read price action because this video is about market structure, and market structure tells you the story of each of this candlestick on the chart right now. It's very, very simple. If you look at this chart now, let's try to mark out the highs and the lows. So this is a lower high right here, and let me get a brush too, 1 second, the highlighter too. Okay, cool. Yeah, so this is a lower high right here. See, this right here is a break of structure. BOS. This is a BOS right here, because this is a bearish structure and this is the low. This is the lower high and this is a lower low. Now this is another lower high right here and this is another lower low. Now the moment price closed above this, like this is a market structure shift. But you see the way price closed above this, market structure shift right there. You don't even need to confuse it. This is a market structure shift. And then now this is a new higher high. And now we're looking at this until we saw that price also switched again, another market structure shift, bearish. So now we have a bearish continuation and a bearish market structure shift. So this we can term as a bearish market structure shift. And then this is a low, this is a high. Sorry, this is a low, this is another high, this is another low right here. I took this trade recently. Let me show you this one. On this box right here. And if you take a look at this, you're going to see exactly why I took this trade. So this is a fair value gap in between this box. And all I really needed to see was, okay, fine, price has already switched to a bearish market structure, and all we needed to see was this. So this was a market structure shift bearish. So this, the moment I came to the market that day on the 9th of October, I just came in and I saw a bearish market structure shift and a fair value gap being printed right there. So all I needed to do was just mark out my fair value gap. Price is bearish on the 4-hour time frame. I'm bearish. And the next thing I needed to do was just focus on liquidity. So if I look into this box, I'm going to see all of this. And if you look at this, if you're currently trading the London time zone, you're going to see that we had a liquidity raid of Asian highs, and then we did a bearish market structure shift. And that's why I was saying, when you're looking at price action, you need to be looking at it from the 4-hour time frame linked to the 5-minute time frame and the 15 minutes time frame. So after you've been able to identify your structure on the 4-hour, you come down to the 5-15 minutes, and you also identify the structure on the 5 minutes, 15 minutes, so that you can capitalize on the move. So basically, this is a bearish trend. So all I'm looking for is sales, but I need liquidity to be swept, and the most significant liquidity that I can see is Asian highs and Asian lows. So we took out Asian highs and we created a market structure shift right here. So if I'm marking this out, you're going to see that we have a market structure shift right here. And yeah, so this is a market structure shift, and all you need to do as a trader trading the London time zone is, price is bearish on the 4-hour time frame. We have a 4-hour fair value gap, and we have an Asian high liquidity being taken. So once this liquidity is taken and you see a market structure shift, you get in, you capitalize on the move, taking your 1 to 2, 1 to 3, and you bounce. But the main reason for this video is market structure shift. And let me go back into the structure of price one more time. So this is a market structure shift, and if you look at this, we shifted structure here, and then this now you can also term it as a break of structure. But if you look into this part of price, you're going to see that we have this high and this lower high as well. And let me just brush it out for you so you can see it correctly. Okay, cool. So this is a high, and this right here is a bearish market structure shift. This is a low, and this is a break of structure. So if we start from here, we have a liquidity sweep right here, and we have a break of structure. We have an high, which is an higher high. We have an higher low right here. We have an higher high right here, but price chopped around. This is internal structure, which you don't need to pay any attention to in the market. All you're looking for is a bullish trend, a bearish trend, consolidation, break of structure, and a market structure shift. So this is a break of structure, this is a break of structure, this is a market structure shift right here. This is a market structure shift because price was bullish and then price shifted structure and now price is bearish. Now, if you look at this point again, you're going to see that we have a low here. So now in a bearish trend, the moment price broke or market structure shifted to the bearish trend, this is a high, this is a low, this is a high, this is a low, and this is another high, and this is a low. At this point right here, we have a bullish market structure shift to the upside, which means price is bullish. And all of this in between here is internal structure. This is an higher low. This then take out this. This is a liquidity sweep. And now price shifted right here, bearish again. So now this is a bearish market structure shift right there. And this just shows you exactly how price moves in a very, very choppy way. But the only thing you need to understand is bullish, bearish, break of structure, market structure shifts. Now, this right here is a liquidity sweep, but this is the last low and this is the last high. All of this in between is internal structure. You don't need to pay any attention to it. So the moment price closed below this last low, then you have your bearish market structure shift. So now if I take out the brush right here, you're going to see a low, you're going to see a high, you're going to see another low liquidity sweep right there. So now this is a liquidity sweep, and then price switched to a bullish trend again. So even though this is an high, this is a low, this is another high, internal high, this is a low. So there's a liquidity sweep right here, and there's a market structure shift bullish right there. Now this is a bullish market structure shift now, and this is a bullish trend. So when you're looking at the chart, you're going to see market structure shifts in between, a low, lower low, and high, lower high, a low, lower low, and high, lower high, a low, lower low. This is a break of structure, bullish, up. This is internal structure. You don't need to pay attention to it. So this is a break of structure because the 4-hour candle closed above the last high, basically. So if this is a break of structure, this is an high, a new high, this is a new low, this is another break of structure. Now, this is a new high, this is a new low, this is a liquidity sweep. What's the difference between this and this? This candle closed above, this candle closed above, this price just wicked it, and that's a liquidity sweep. Now, this in between right here is a market structure shift bearish. So the moment price closed below like this, and then price came back to tap into this other block, you see the way price just continued and flushed back down. So now this is a bearish market. So basically all I'm trying to say is this: once you're able to understand what's really going on in the market, once you're able to understand how all of this ties together, from a bullish trend from here, a bullish trend all the way from here till this point where there was a market structure shift, bearish, you can see it right there. So to this point where there's a bearish market structure shift, so this is a bullish trend, this is a market structure shift, bearish, this is a bearish trend right there. So we have this high, we have this low, we have this lower high, we have this lower low, we have this lower high right here, we have this lower low, we have this lower high, and the continuation like that. So it's very, very simple. You just need to pay attention to price, and you'd be able to understand exactly why and how price moves like this. So okay, great. So now we've been able to understand the basic trends, bullish structure, and we've also been able to understand the bearish trend, the bearish structure. We've also been able to mark out break of structures and market structure shift, and we've also been able to understand reversals. So a reversal is basically just a market structure shift from a bullish trend to a bearish trend, and it's termed by a candle close below or above. So in a bullish structure, you're going to have the last higher low. So when price is switching bearish, you have to see a bearish market candle close below the last higher low for it to be a bearish trend now. And once you see that, you're just waiting for the candle to close. That's a bearish trend. And then in consolidation, you basically just want to avoid consolidations because that doesn't really help you anyway. So you only focused on bullish trend, bearish trend, break of structure, market structure shifts, and that's it. And then internal structures you don't even want to look at because it's noise, and price can go up and down, up and down, up and down, but you only want to focus on the last higher low and the last higher high in a bullish trend. And for a bearish trend, you only want to focus on the last lower high and the last lower low. Anything in between the last lower high and the last lower high low is noise. So that's basic trend analysis and basic trend understanding. But mostly, I've also been able to show you what liquidity sweep is on the market, and a very, very clear example of what liquidity sweep is what this I did right here. So this, all I need to do when I come into the chart and I see this is I just term it as a liquidity sweep. So price just swept liquidity and took out all their orders, stop losses, market orders, all of those, took it all out, and then created a market structure shift. So you see how I've been able to create this and make it so easy for you to understand. All you need to do is just have this. So once you see this, this is a market structure shift. So you see the way this is a live GBP USD chart, but this is a liquidity sweep right here, and this is a market structure shift. Now this is a lower low, and this is a lower high, and this is a new lower low, and there's a break of structure right here because the break of structure is stemmed by a continuation in the trend. So a bearish trend candle close, you term it as a break of structure and continuation like that. So if I'm going to trade this now, given everything I've shown you in the chart, if I'm going to use this to mark out a trade, a live trade, I'll just come into the charts. Let me show you what I'm going to do, and that would also show you exactly how to use the premium and discount zone. So all I need to do on a price action like this is just come into the chart and see exactly where price is and what price is doing. So I just come basically to the 4-hour time frame and I'm looking at this. So if I'm going to use my Fibonacci to mark out the highs and lows, all I need to do, for example, this structure right here, all I'm going to do is this. So I'm going to just, because if you look at this structure, so another thing very good that we're using a live chat, you can easily understand. So this is what I'm going to do. Come in here. This is a liquidity sweep right there. Is everywhere on the chart. Price is sweeping liquidity every single day, every time, every minute, every second. This is a liquidity sweep right here, and this is a bullish market structure shift. But you'd see, if you look at the chart very well, you're going to see that price first, when price got to this last higher high, or this last high, or this is actually a lower high. So the moment price got to this lower high, price swept liquidity on this, took out traders, took out stop losses and all of that, because people will be trying to sell at this point. But this is a liquidity raid, and the moment price raided liquidity right here, it now created a market structure shift bullish. All of this in between is internal structure. Just avoid and basically only focus on this. So you know this is a liquidity rate. There was a liquidity rate right here before the market structure shift, and then you can now focus on the market trend from here as well. But this is just basic market structure and simply understanding it. All you need to understand is liquidity rate is just when the candle doesn't close below the low, or doesn't close above the high. So once price sweeps it, then it looks like, okay, price just swept it and then continued in the opposite direction. That's a liquidity rate. This is a liquidity rate as well. And there's another liquidity rate right here in the charts that you can take a look at. So this is another liquidity rate right here as well, because price is basically not closing above. So had it been this candle closed above this, we're going to say that's another break of structure. But price just swept liquidity and moved in the opposing direction. So now if price actually closes below this low, this is a market structure shift. Again, bearish. And all you need to understand is the difference between a market structure shift and a break of structure is a break of structure. If the price is bullish, the candle needs to close above the last high or the last low, and once it closes above or below it, we have a break of structure. And then for a market structure shift, all you need to do is, if it's a bullish market trend and prices switching to a bearish market trend and you have a candle close below or above, you have a market structure shift as well. And break of structure, just continuation in the same trend, closing above, for our candle closing above. And then we also have internal structure as well that you don't need to pay attention to. So liquidity rate, I've also been able to show you what liquidity sweep is. This is a liquidity sweep, this is a liquidity sweep, and if you keep going in price, you're going to see this is another liquidity sweep right here. Liquidity is just everywhere on this chart, and you really need to dive deeper into what liquidity is for you to be able to understand how to trade alongside it. So basically, market structure just tells you the story of price, and all you need to understand is the basic trends. Is in a bullish trend, bearish trend? Is there a market structure shift? Is there internal structure that you don't need to pay attention to? And is there liquidity rate? And that's it. And then now, in terms of premium and discount zone, all you really need to do to understand premium and discount zone is use your Fibonacci, and Fibonacci is on the top left corner of the page. All you need to do is drag your Fibonacci from the last low to this high. Now, based on this structure, this is the 50% of the range, this is the median range. This now is where you want to call your discount zone. So let me mark this out as the discount zone. So anything below the 50% is your discount zone, and anything above the 50% is your premium zone. This, you don't even need to miss it. You don't need to complicate it as well. It's not really that difficult. All you need to do is use the Fibonacci tool on the top left corner, and you mark it from this low to this high. Then you can see all of this right here is on the premium zone, and all of this right here is on the discount zone. Now, how you use this is this. So if you're looking for buys, the best place to buy is actually on the discount zone, because you don't want to buy a market that is already high. So take, for example, you're trying to buy a car, and the price of the car is, you've done your market analysis, the price of the car. So the price of the car is probably 1 million. Anything above 1 million is premium. Anything below 1 million is discount. Now, as a buyer in the market, once you know the average price of the car, all you're looking for to do is buy at a discount, because you want to make profits, and that's the only way to make profit anyways. So when you buy at a discount, then you go up, or you follow price up and sell at a premium, vice versa. So if you're looking for sales, you're selling at a premium, and if you're looking for buys, you're buying at a discount. Now, this is how I use this to easily understand what's going on in the market and capitalize on moves. So all I really need to do is come into the market, mark out my Fibonacci, understand if we're on the premium and discount zone, and then use my rectangle tool to draw out my boxes for understanding what the fair value gap is. So basically, this is my rectangle tool, and if I'm going to buy, I'm looking for price on the fair value gap, this fair value gap, or this fair value gap right here. So you see, we have these two fair value gaps. These are where I'm going to be looking to buy from. And if I'm going to sell as well, since we don't have a fair value gap here, But we have another fair value gap here. This is where I'm going to be looking to sell from. And if you look at this chart right now, if you look at what I have on the chart, you're going to see how the fair value gaps are easily respected. See, the first time that this fair value gap was created, price tapped into it and immediately reversed. Again, price came back into this one. It tapped it the first time, reversed, came back again into it and reversed. This is a 4-hour time frame. So you're seeing this clearly. And this is a discount zone. So people understand that prices on this fair value gap and they're willing to buy. Anytime price comes back into this fair value gap right here, I just need to go to the lower time frame to understand what's really going on. And I also need to look at my 4-hour candle liquidity sweep and the daily time frame candle liquidity sweep as well to understand what to do. But in terms of structure, all you need to understand is a bullish structure, a bearish structure. I'm only willing to buy in a discount because that's the only way I can make profits, and those present the highest probability setup. And I'm only willing to sell at a premium because when I sell at a premium, that's the only way I can make profit as well when price goes down. So basically, you can see now the only thing that you need to understand next is you need to pay attention to fair value gaps. I'm willing to sell by this market at any point in time. If price comes back to this point right here, if price comes back to this point right here, to this fair value gap again, I'm going to sell. I'm not even going to think about it. All I need to do is look at how liquidity is being created and how liquidity is being taken and use that to sell. But based on naked market structure, you only need to understand if price is on a bullish trend. For example, you can see this right here. This is just basic internal structure. It's not really, this is the last high. This is the last low. This is a break of structure bullish. This is an high right here. This is a low right here. This is an high right here. This is a low right here. This is a new high. But you can easily call this a liquidity sweep. And there was a market structure shift bearish right there. So this is a bearish market. And this is a bearish order flow. So all I'm looking for is price to come to my discount. And then I buy. Or price goes back into the fair value gap on the premium zone. Then I sell. I think that's pretty much it. It's very, very simple. You can easily understand it, but you need to look at price from this angles that I'm showing to you right now because I've tried all the strategies in the market. Honestly, I've tried the trend lines, I've tried the third bounce on the trend line, I've tried the break of the trend line, break and retest of the trend line. I've tried psychological level, I've tried support and resistance, I've tried supply and demand. But I'm telling you, if you look at the charts in this way I'm showing you, your life is not going to remain the same because this is what fuels the market and this is how price moves. And when I come to the chart in the morning, within the first 5, 10, 15 minutes, I already understand what is going on. Are we in a bullish trend? Are we in a bearish trend? Is it a break of structure? Is it a market structure shift? Are we on a bullish fair value gap or are we on a bearish fair value gap? Are we at the premium zone or we at the discount zone? Now, most of the times when I come into the market, we're on the premium zone. I'm only looking for sales. On the discount zone, I'm only looking for buys. That's the logic behind the market. It's not just, oh, prices at this level, I need to buy, I need to sell. No, you want to buy at a discount, sell at a premium, but you also need to understand market structure, basic market structure, break of structure, market structure shifts. They also call it change of character, but all you really need to do is just focus on this right here: basic trends, trend basics, market structure, higher highs and higher lows, and then market structure shifts, break of structure only when the candle closes above the last high or above the or below the last low, reversals. And you also want to be able to understand break of structure versus reversals. And we've also talked about internal structure, which you don't want to pay attention to. We've also talked about liquidity sweeps. It means when price go to the particular zone, price then close above or below it, price just wicked it. So liquidity sweep can easily be identified as weeks. And then we also talked about the premium and discount zones, and then we also looked at time frame alignment. So I'm only focused on the 5 minutes, 15 minutes, 4-hour, and the daily candles or the daily market time frame. That's all I'm looking for, and live trade. So for you to live trades, for you to be able to capitalize on trades, you just need to come in and understand, are we in a bullish trend, are we in a bearish trend, and I'm only willing to buy at a discount and I'm only willing to sell at a premium. But this is just the basics. This is just the foundation of your understanding of market structure. In the next video, I'm going to show you how to use these fair value gaps, because when you look at this right there, this is a discount, this is a premium. You can see these fair value gaps right here, but I'm going to explain to you in the most simplest way why we should use fair value gap and how we can easily transform your trade idea. Congratulations on making it all the way to the end of this video. That alone shows your dedication and commitment to becoming a consistently profitable trader. If you found value in what you just learned today, don't forget to hit the like button, subscribe, and turn on the notification bell so you would never miss out on future episodes, because in my next video, I'm going to show you exactly how to build a trade idea using fair value gaps, following market structure. Finally, if you're truly serious about mastering these skills and you want to fast track your journey to profitability, click in the link below to get the free mini course and join the exchange program. You'll get personalized one-on-one guidance. Remember, consistency beats speed, but the right guidance makes the journey smoother. Until next time, stay disciplined, keep learning, and I'll see you in the next one. Peace.